Hi, everybody. It's Dr. Robinson. This is the January 14th, 2023 meeting of the Money Masters Investment Club. Fairly quick meeting today, not very many slides. So without further ado, let's look at them. Our itinerary, same as it was last week. We're going to look at our financials and a minor corporate update. So for the week, guys, we started out with a NAV of 26.99. We gained 40 cents during the week. So our NAV as of 1/14/2023, $27.39. So for the week, a 1.48% gain. Now you may have been expecting, I was hoping to have the new numbers for the fourth quarter. They're not done yet. I'm expecting them. We've got a holiday on Monday, but I'm expecting to get those Tuesday or Wednesday. So I don't have them officially yet. So I'll let you know. I'll have to wait till next week to update you on all the numbers. There's a holiday obviously this week, and I'm sure the accountants are working hard, but maybe they're a little bit behind. But in any event, we'll have those numbers for you in next week's meeting. That means also, by the way, just to throw that out there, we'll be getting the statements out to you probably starting Wednesday. Don't hold me to that. It kind of depends on the schedule and how things are going. But Wednesday or Thursday, we'll probably start getting those statements out to everybody, assuming I get the financials back from the accountants by Tuesday or so. So be on the lookout for those. You should see those pretty soon. Our strangle, you'll notice that our strangle has kind of changed a little bit. The market is in a slow incline, and I say slow, it's just horrendously slow. I've got another a video I'm going to post here over the weekend, probably on Monday, looking at the VIX. The VIX has fallen quite a bit. The VIX is only at 18, close to 17. We haven't seen a VIX this low in quite some time. And of course, for those of you who understand the VIX is our fear gauge. So the amount of fear in the market is declining precipitously. Now, keep in mind, we like fear. We trade on fear. But when the markets come down, or when the VIX comes down, that means there's some complacency in the market. And complacency means that we can still make some runs, but the runs don't go as long, and those that do take an awfully long time. So they're slow. The markets don't change that fast. They may go up. And if you've seen the markets last week, we had a couple of days where the markets were up 8 points or 12 points or something of that nature. So it doesn't change very often. It doesn't change very quick, especially from where the futures start out. So we're starting to see some slowing in the market. I'm not sure, in all honesty, what might be driving it. We do have a Fed meeting coming up. I think it's February 1. Don't hold me to that. But in any event, the markets have slowed down. But they are on a small increase or a slight incline, which means our calls are starting to pull back a little bit, or actually go ahead a little bit further. So our calls are up by, are out of the money by only $2.04. That's an improvement over last month's. The puts, however, have come back a little bit. They're only in the money by $3.67. So we've seen an overall decline in an unrealized gain of $221,000 simply because the market's just not moving that much anymore. And for the moment, it seems to be moving in the wrong way. We had been on a downtrend since November. I'm not entirely sure yet if the downtrend is over. It's beginning to feel like the downtrend is over. And we may want to start getting back into the market, both on the call side. I may have to redo the calls, but it might be also time for us to start considering getting back into the market as a whole. I had a conversation with a couple of people during the week about, is it time to get back in the market? And I think it's getting closer. I do expect the Fed to raise interest rates next on February 1. That's in what, 2 or 3 weeks from now. But I do only expect it to be 25 basis points. I think the market will freak out a little bit if it comes in at 50 basis points. And of course, I don't think it's going to come in at 0. So I don't think the Fed is going to say we're not going to do any more changes for the moment. The comments from the Fed are still that they're looking for a number above 5%. We're not there yet, but it would only take 25 to 30 basis points or so. 50 basis points would get us right where they need to be, but I don't think they're willing to do 50 right now. That sends the wrong message to the market. But in any event, our strangle is kind of chilled out for a little bit. Remember, strangles and straddles, we need movement. and the market's just not moving that much right now. And I will show you in the next day or so. I'll post that video on the VIX and show you what's happening in the market and show you how slow the market really is. It's hard to see it when you look at it post market, but during the market it moves so slow that you have to sit there at your computer waiting for every little tick on the charts to see whether to continue holding your position or get out of the position, take your profits, or whatever it may be. Even in the morning, we're getting some kind of weird things happening. But having said that, hopefully the VIX in the next few weeks will start coming back up. I don't think this is the bottom in the market, by the way. I do think we're going to start trending back down again, whether it's the Fed meeting that does it. Even if it's not the Fed meeting that kind of precipitates another decline, there is still issues with the recession and companies laying off, company profits. We're in profit reporting periods now, where companies are reporting. We had the banks report last week, and some of the numbers, the banks' numbers were actually pretty good, but their outlook for things was not very good. So it kind of put a damper on the market. So the market wanted to go up, but it didn't go up as much as it had wanted to, simply because the banks had kind of put a damper on it to some extent. But as that goes on, we'll see what the market does and see where it goes. But for the moment, the VIX is kind of declining, and it's posing a little bit of trouble for us, but nothing we can't overcome. The only other thing I wanted to talk about real quick was my board of directors kind of contacted me during the week and just told me that they thought I kind of said something in the wrong way, and I wanted to clarify my statements. So the board has asked me to clarify my remarks about the $50 million I told you about last week that was added to new money. The PowerPoint slide that I showed you could be construed to imply that the $50 million went into the investment club. That's not true. I don't want to make it sound like that we put the additional $50 million into the investment club. The money that came in is retirement money, and under IRS rules, that's called qualified money. It comes out of a 401k, IRAs, and things. So you cannot legally mix IRA money with non-qualified money. And of course, the investment club is non-qualified. So legally, we can't mix those two. So the $50 million that came in, it goes into a different account. I cannot commingle this money. So I don't want to make it sound like we've got an extra $50 million in the investment club. We do not. We have to keep that separate, and it is in fact separate. I shared the info only to illustrate how my trading strategy will have to change across different accounts regarding redemptions. Remember, even on the $50 million, I can't trade all of it all the time. I can do my best, and I can trade a lot of it. But even with that, I have to have a strangle or a straddle to keep the growth going on the amount of money I'm not trading. And again, when people make redemptions, now they're not supposed to be making redemptions in qualified plans because there's tax penalties. But you know how it is with people. People frequently take money out of the retirement plans for whatever reason. And because of that, I have to have a policy across. I decided to apply a policy across all of my accounts so that those who are making the redemptions don't necessarily hurt those who are holding and doing the long-term investing. So I just shared it for a kind of a FYI type of thing. But the way I described it made it sound like the $50 million went into the investment account, and it did not. I just wanted to clarify that. If you have any questions about it, send me a message, text, phone call, whatever it is, email, and I'll be happy to talk with you about it. But that was separate money, and I apologize for that. It's just sometimes I assume that people know what when I'm talking about. I kind of thought everybody knew that I was talking about a retirement plan, and by talking about a retirement plan, I assumed everybody knew that I could not legally put retirement money in with our investment club. That's not legally allowed. So having said that, I'll have a video for you in the next day or so over some of the stuff I'm watching on the VIX and some other things, just more, not so much the stuff that we do on the weekly meetings in terms of balances and things, but just some of the things I'm kind of looking at in the economy and in the market. So having said that, enjoy your long weekend. We're not trading, of course, on Monday, next couple of days. We're not back until Tuesday because of the holiday. So for those of you on the normal meeting, we'll see you on Tuesday. For everyone else, we'll see you next Friday or Saturday on the meeting. Have a good day.